Many prominent US housing market commentators and analysts have taken the slowdown in market sentiment to issue warnings as to the sustainability of the US house prices bull market, such as Professor Robert Shiller's recent comments expressing surprise at the strong rise in US house prices and that it is likely overvalued along with stocks and bonds. However, what most academics repeatedly miss is the significance of momentum and sentiment on trend, which is accumulative, as I've covered several times over the years, such as in my video of August 2013. What the academics and journalists fail to understand about markets is that markets are not primarily driven by fundamentals, but by sentiment, and it is sentiment that creates the fundamentals, which is why academic economists are nearly always looking in the wrong direction, because they are looking at the cause rather than the effect, as it is the effect that makes itself manifest in the price charts long before cause appears in the economic data. As house prices rise, homeowners see the value of their assets rising, so are more disposed towards consumption, which drives economic growth. The US house prices trend is now passing the midway point of my long-standing 3-year plus forecast as of January 2013. Therefore, my forecast conclusion is for the embryonic bull market of 2012 to morph into a real terms bull market of 2013, where each year builds on the preceding year's momentum all the way towards an average price gain of over 30% by 2016. This translates into a precise forecast for the Case-Shiller CXSR index to rise from the most recently released data of 158.8 released in December 2012 for October 2012 to target a rise to 207 by early 2016, or a gain of 30.4%. My US house prices outlook for 2014 update of early January concluded in expectations for a sharp slowdown in US house price inflation during 2014, as I expected house prices to converge towards my forecast trend trajectory. The latest US house prices data released for May 2014 shows that US house prices are gradually converging towards trend forecast, with prices now standing at forecast plus 5.3% deviation against plus 7.4% deviation in January, based on October 13 data. US house prices momentum continues to slow from a peak of plus 13.9% for November 2013 data to now stand at plus 9.2% for May 2014 data, with the trend looks set to continue to under 7% inflation before the end of this year, probably bottoming out at around plus 4%, just as the doom merchants become most vocal on the end of the US housing bull market mantra. So, in conclusion, continue to expect much more doom and gloom to accompany the slowdown in US house price inflation during the remainder of this year, which in reality would just be house prices oscillating around the central trend forecast of 10% per year. This will sow the seeds for the next surge higher during 2015 and ultimately all the way to new all-time highs in a couple of years or so. Ensure you're subscribed to this YouTube channel for regular updates on the current state of the US housing market.